Hey everyone, it's Rod with Pow Group. Welcome back on the Pursuit of Wealth, your home for MJ stocks, crypto assets, and interviews. Also home to the best MJ community in the planet. Today is Tuesday, August 15th. Hope you're well. And in this video, we're going to dive into Auxly's Q2 2023 earnings. They did miss estimates in terms of revenue and earnings per share. We'll discuss all that and more. Also want to take a look at the chart. Could be a nice laggard play, but full disclosure, I do own this stock and I will never tell anybody to buy, sell, or hold. This is not financial advice. This is for entertainment purposes only and my own thoughts and opinions. But I do think that there's enough reward here. There is definitely some risk, but there's definitely some reward here as well. And we'll go through the earnings report. I'll give my thoughts and opinions, but I do think it could be a nice rebound play long term. Also, before we jump into the article here, make sure to go follow Group Pow. So Pow Group on X, formerly Twitter, and the handle is @Group Pow. I'm going to be using that as my platform of choice going forward, and it's the best way to get out any kind of real-time updates to the community. Auxly reports Q2 2023 financial results, and just before we dive into the nitty-gritty here, I do want to just bring up the revenue. So 21.99 million actual versus a forecasted 25.45 million. Pretty big miss there, and then EPS was forecasted at negative 0.01, and it came in at negative 0.0128. So a slight miss on EPS, but a miss nonetheless. And then, like I said, a pretty big miss there in terms of revenue. And revenue has been dropping. You can see 27, 19, 24. It was a nice tick up there a couple of quarters ago, and then it started to kind of trend back down again. But we know that pretty much a lot of the LPs are dealing with a similar problem. And there's over 1,000 LPs now, so it's just competition is definitely rising. The market is saturated, and it's just in my opinion, it's just a matter of time before we start to see more consolidation, mergers and acquisitions, insolvencies, bankruptcies, things like that. It's just not sustainable, right? And Auxly could even be a nice target for a potential buyout target as well. If we just take a look at the market cap, it's just a hair over 20 million. And then if you take a look at the shares outstanding, there's currently 1 billion. So they're more than likely going to need to do a reverse split, I would think. They probably have to reorganize that share structure. 1 billion is a lot of shares, so it's going to be really hard to move the price. And like I said, I wouldn't be surprised if we did see a reverse split or some sort of buyout in the future. Let me know in the comments below what you think of that. Do you think Auxly could be a buyout? Do you think we could potentially see a reverse split in the future as well? But diving into the results here, I'm not going to go through the entire article in effort of time, but I'll go over some of the key highlights and my thoughts and opinions on some of these key points. So they released their financial results for the 3 and 6 month period ended June 30th, 2023. And all amounts are Canadian dollars except common shares and per share amounts. So highlights and subsequent events. Total net revenues of 22 million in Q2 2023, a decrease of 2 million or 8% from the previous quarter, and a decrease of 5.3 million or 20% compared to the same period in 2022. SG&A declined by 1.3 million or 13% from the prior quarter, and 4.1 million or 32% of the same period in 2022 as the company continues to focus its efforts on reducing costs. And Auxly's not the only one, right? We know a lot of the LPs in Canada overplanned and just had overcapacity and didn't need that much facility or growth space, and we're just seeing a big reduction to SG&A and COGS. Adjusted EBITDA was negative 1.1 million, an improvement of 2.9 million compared to the same period last year. They retained number 5 LP position in Canada with a 5.2% market share and continued to improve sales in the pre-roll segment, one of the fastest growing product categories, finishing the quarter with 3.4% share of markup from 2.9% from the prior quarter. Back 40 Wedding Pie grew to become the number 1 non-infused pre-roll SKU nationally in the quarter. So that's great to see. Definitely a great product. Successfully streamlined operations by transitioning all remaining dried flower and pre-roll MJ product manufacturing, processing, and distribution activities to Auxly Leamington, and further strengthened the company's balance sheet by entering into an agreement with strategic partner Imperial Brands. I did a video on that. They extended the maturity date of the Imperial Brands convertible debenture by 2 years from September 25th, 2024 to September 25th, 2026. So here's the highlights. You can see 21.99 million. We had a net loss of loss of 12.863 million. So if you divide that by 1 billion shares, that gives you your negative earnings per share of negative 0.0128. And then adjusted EBITDA negative 1.078 million. We had just over 1 billion shares. So 1 billion, 2 million, 14,308. And then if we take a look at cash equivalents, they've got 8.557 million. They've got total assets 316 million and change, and then debt 174 million. Here's some commentary from Hugo Alves, the CEO of Auxly. He commented, the results of the second quarter 2023 reflect our focus on simplifying and streamlining the business to improve operating efficiency and reduce costs. We have successfully consolidated our dried flower and pre-roll MJ product manufacturing, processing, and distribution activities, which was a key strategic goal for this year. While the transition had a temporary impact on the sales and financial performance during the quarter, we have already observed a positive impact of increased product throughput and improved product quality as a result of this consolidation. This is part of a broader strategy to ensure Auxly can remain competitive against a backdrop of continued price compression and disproportionate taxation in the adult use recreational market. So again, they continue to talk about the competition, price war, and then obviously the taxation being a big issue here in Canada. So the net revenues for the 3 and 6 months ended June 30th, 2023 were comprised of approximately 50% in sales of dried flower and pre-roll MJ products, and then the remainder from oils and MJ 2.0 product sales. Consistent with prior periods, as the company does not participate in the Quebec market, approximately 85% of MJ sales during the period originated from sales from BC, Alberta, and Ontario. Gross profit. Auxly realized a gross profit of 6.1 million and 13.9 million for the 3 and 6 months ended June 30th, 2023, resulting in a 28% and 30% gross profit margin, respectively, which isn't too bad for the MJ industry. We want to definitely see it higher than that, though, long term. Speaking of long-term outlook, in 2023, we aim to continue to improve earnings performance, increase focus on key product formats, and then lower costs and increase efficiency, which we expect will yield positive results. With these actions in mind, our goals for 2023 are broadly defined below. Increase net revenues by 15% with a focus on key product categories, enhanced by strategic expansion of our product portfolio, while supporting strong retail distribution through our internal sales team. Continue to leverage Auxly's Leamington large-scale, low-cost cultivation facility and the company's manufacturing automation to increase blended cost of finished MJ inventory sold margin to an average of 35 to 40%. That kind of goes in line with what I just said. Vigorously manage SG&A as a percentage of net revenues to keep it below 40%, further building upon savings realized in Q4 2022, and prudently manage the company's balance sheet and streamline assets where possible. And then the company will not host an earnings conference call, and the company does not anticipate reinstating earnings conference calls until further notice. But moving on, we'll take a look at the chart here. So this could be a nice laggard play. Auxly looking to start the monthly bounce. And if we break above 2 cents, that's going to be key resistance, because if we break above that, we have nothing till about 4.5 cents. We have EMA 12 there at 3.6 cents. And a lot of our names are starting to trend back to their monthly EMA 12s. If we take a look at Tilray, for example, it's back testing and it's finding resistance right at that EMA 12. And again, usually when the leaders in the space do it, we start to see that trickle down into the lower cap names, right? So this would be like a tier 2, tier 3 name, in my opinion. But again, if we start to trend back to that EMA 12, that would put us around that, like I said, that 3.6 cent area. And we are gearing up for a potential bull cross of these EMAs. And specifically on the weekly time frame, we're going to be looking at, because realistically, we've just been a complete bloodbath for the last couple of years, just like most of the MJ space, right down 80-90% plus. But you can see here we're gearing up for an EMA 12 and 26 bull cross here on the weekly time frame, and a very illiquid name as well. Not a lot of volume traded on this ticker, but going to be watching for that weekly EMA 12 and 26 bull cross here over the next couple of weeks, and then we'll start the monthly bounce. Could be a nice trade opportunity if we get back to EMA 12. That's about an 80% opportunity, and then at EMA 26, you're looking at over 400% of upside from there. But we need monthly uptrends as well across the sector. So we need to start the monthly bounce followed by a monthly higher low and a higher high to be back into a monthly uptrend. And we need that across the sector. Then we need to see EMA 12 and 26 bull crosses on the weekly time frame across the sector to be confident the bottom is in. And then we'll want to see golden crosses as well, with the 50-day moving average looking to cross below up through that 200-day moving average. And you can see here last time that happened, price surged, and then we had a death cross with the 50 above the 200-day moving average, price cratered. And now we're gearing up for another golden cross, and this time we're way more beaten down than we were the previous time. So we could see a ton of upside here, and again, we want to see that across the sector. If we take a look at the 10-week moving average, we're above it at the moment, and we're blasting off super bullish here on the MACD and the stochastic as well, which again is in line with a name like Tilray, one of the leaders in the space. You can see here we're starting to see momentum really pick up to the upside here as well. And then in terms of the weekly moving averages, we have the 50 weekly there at 2.35 cents. So if we can get over that, we've got some runway into the 100 weekly there at 8.92 cents. And then, like I said, that 200-day moving average at 2 cents. So 2 cents is going to be key to get over. And then, like I said, Tilray getting above its 200-day moving average. So if Auxly can do it, if Tilray can do it, Auxly can do it. And then again, Tilray on its weekly time frame getting above its 50 weekly moving average. So again, if it can do it, Auxly can more than likely do it as well. And then we've got some runway there until, like I said, just over 8 cents. But going down it there, like I said, I think that Auxly long term could be a nice gamble, right? There's definitely some risk, but it's only a small percentage of my portfolio. So I'm only able to risk, it's not going to be any more than 10% of my MJ portfolio or anything like that. It's just going to be a small amount that I'm setting and forgetting. And, I'm okay if it goes to zero. I don't think it's going to go to zero. I think Auxly could either be a buyout target or they're going to swim long term. But like I said, it's definitely a nice company to be betting on because of the fact that, it could be a buyout target and they've got some real good products. They've got just over 5% market share, top 5 LP. Market cap ridiculously low. I just think that there's a lot of reward here versus risk, but there's definitely risks. So that's why I'm only allocating a small percentage of my MJ portfolio to it. But let me know what you think of this earnings report in the comments section below. We'll continue the conversation there. It's Rod with Powell Group. Thanks again for joining us in the pursuit of wealth. Hope you have a great evening, and we'll see you on the next video.